Have you ever really stopped to think about what's going on inside the financial reports of the world's biggest tech companies? I mean, we all hear about the massive revenues, right? But the real story, the secret to how they actually operate and innovate, is kind of hidden in the details. So that's what we're going to do. Peek behind the curtain at the financial secrets of big tech. We think we know, right? Google sells ads, Meta runs our social feeds, but honestly, that's barely half the picture. The truly wild part is how they use all that cash to build the future. And a lot of the time, that means losing billions of dollars on purpose. To really get how that works, we need to quickly get on the same page about one key idea. And that idea is profit margin. It sounds complicated, but it's not. Basically, if a company has a 40% profit margin, it just means that for every single dollar in sales, they get to keep 40 cents as profit. It's a super simple number that tells us which parts of a business are the real cash cows. And believe me, some of these cash cows are just staggering. So this brings us to the first part of the big tech strategy, the profit engine. See, every single one of these huge companies has one, a core part of their business that is so ridiculously profitable, it can pay for everything else they do. Let's just start with a number, 57.7%. Just let that sink in for a second. That is a massive profit margin. What in the world could be that profitable? Is it some futuristic AI project, a brand new cutting-edge gadget? Well, the answer is probably not what you're thinking. That number? That belongs to Microsoft's division that runs things we use every day, like Office software and LinkedIn. Think about that. For every dollar this part of the company brought in during 2025, almost 58 cents of it was pure operating profit. It's a stable, reliable money-printing machine. And this strategy, it is absolutely not unique to Microsoft. Nope, Microsoft is not alone in this. I mean, look at this. Meta's family of apps, that's your Facebook and Instagram, and Google's core services, they also have these incredible profit margins. They've perfected the art of turning our scrolling and searching into these super efficient profit engines. But what do they do with all that cash? Well, they place bets. Huge, risky, and often money-losing bets on what they think is coming next. So now let's flip the coin and look at where all that money goes. This slide, this shows you the whole strategy in a nutshell. It's perfect. In 2021, Meta's apps made a jaw-dropping $56.9 billion in profit. At the same time, their Reality Labs division, the one building the metaverse, lost over $10 billion. And that's not a sign of failure. It's the plan. The profits from today are literally funding the dream of tomorrow. And just look at the scale of this bet. It's wild. The money Reality Labs actually made is just completely dwarfed by how much it lost. Meta is, in effect, paying billions and billions of dollars just to keep its metaverse dream alive. And it's all thanks to the cash coming from its social media app. And of course, it isn't just Meta. Google has a whole division literally called Other Bets. This is where they put stuff like their Waymo self-driving cars. In 2022, that division burned through more than $6 billion. These are their moonshots, and they're all funded by the reliable old profits from Google's search. So what happens when one of these bets actually starts to pay off? Well, that brings us to what might be the most dramatic financial story in tech right now, NVIDIA. For years, they poured money into a huge bet on high-performance computing. And then the AI wave hit. Okay, let's rewind the clock to just early 2023. Back then, NVIDIA's business was pretty balanced. You had their graphics side, famous for gaming cards, and then you had their compute and networking side, which was for data centers. Both were big, important parts of the company. But then, well, everything changed. Fast forward just 2 years. Look at this. The compute and networking part didn't just grow, it exploded. We're talking nearly an 8 times increase. It became almost the entire company. This is the AI boom captured in a single chart. Suddenly, the whole world needed their chips to power artificial intelligence. In that long-term bet they made, it paid off in a way I don't think anyone could have imagined. And here's the kicker. It wasn't just about getting bigger. The company was totally transformed into an absolute money-making machine. A 71.3% profit margin. That is insane. It's more than double what their original graphics business made. So in just 2 years, their future bet didn't just pay off, it became the single most powerful profit engine in the entire tech industry. This is the jackpot. This is the grand prize of the whole big tech strategy. So when you put all of these pieces together, this clear picture starts to emerge.
It's this deliberate, really powerful financial strategy that has basically defined the last decade of technology.
At the end of the day, these tech giants operate a lot more like investment portfolios than just single companies. They use their super stable, high margin profit engines, the cash cows, to fund these really risky but potentially world changing future bets. And like we just saw with NVIDIA, when one of those bets really pays off, it doesn't just reshape the company, it can reshape the entire world.
Which, of course, leaves us with one last really interesting question. As we sit here and watch billions and billions of dollars pour into all these ambitious projects, you just have to wonder which one of these expensive gambles is going to fizzle out and which one is just quietly waiting to become the next unstoppable profit engine that defines our future.